I think I can now move my stop loss to break even, right? What I do is I think what I do is I don't really break even, or some traders try to get a few pips and not lose a trade. What I do is I keep a few pips behind my entries, so even if I lose out, I would like to lose out with a small loss. So it actually averages, it removes or reduces my average losses that way. When you have so tiny losses, overall the losses will be reduced, right? So if I win with a very minimal pips, my win percentage, or the number of pips won, average pips won, will be reduced. So I want to keep my averages also looking better, and so I'll keep the stop loss just behind my entry. Even if I'm going to lose, I lose a few pips. I don't want to win few pips, right? So it's like a break even for me. But let's see, I hope on a 5-minute chart this will just do a retrace and then continue its journey. So if I have to draw somewhere here, right, so the 200 period is there, EMA, so it should offer some resistance around this area, so it should turn down further from here. It's also the start of the New York session, right, at 4 o'clock, 4 or 5, I think it should be 5. So it's around London lunch now. So I hope the prices reverse from here and go down further. Let's see how it works out. But I think the trade has been working so far really nice. We took the short in the morning, pre-London. So if I go to the hourly chart, so far it has been going good. We expect some bounce here, obviously, because of the support that was there, but now it should take out this support and go down further towards our target. Quite a bounce there. I was not really worried because it is still a resistance level. You can see all the conditions here, right? I've highlighted. So if you just extend that, it's going to be the same resistance. So let's see, prices are at the 200 period EMA on the 5-minute chart. You also have the 21 EMA, which should be offering some resistance. The prices, I expect, should turn from here, turn down. So on 20 pips bounce, that's quite huge. So how many pips it came down? Out of 50 it has bounced back 20. Okay, that gives us 38% retracement. Let's see. Yeah, so it's around the 38% retracement level, so we should expect some prices going down. Come on, 21 EMA, show your power. So what pairs are you trading, guys? Let me know. Any pairs you're looking at, any pairs you want me to analyze for you? So you can see some reaction happening there at the 21 EMA on the 5-minute chart as expected. So now it should be continuation of the trend. So yeah, the prices are going down. London becomes active around this time, even though the official open is still 1 hour away. Did I say London? It is actually New York session. So it's very simple methodology. All you have to do is look for the basics, guys. There's nothing. Nothing complicated. See, Forex is difficult. Okay, there is it's Forex is simple, but it's not easy. Let me rephrase. Okay, Forex is simple but not easy. If you follow the basics of trading, what is the basics of trading? You need to have a trend, right? Buy low, sell high. Right? Buy low, sell high. Identify where you have to buy, identify where you are wrong, and identify where you will take your profits. It should be as simple as that, but it is not easy, right? So people make a lot of mistakes because they don't know how to see price action, understand price action in the context of the trend, to be able to identify the points of entry or exit and your take profit levels. Right, so I think the focus should really be on identifying these basics. If you can do these basics very well, then I think you stand a fair chance of becoming a profitable trader, a consistently profitable trader. So why people fail, first of all? Did you analyze? I think you should just stay away from the screen and ask yourself, okay, I want to trade Forex, but what should be my approach to trading? And you would have heard many people saying, you lose a lot of money in Forex trading. And it's a very, very fair comment. So you should be asking this question: why people lose money? What can I do not to become one of them? Right? So you should ideally like to avoid the mistakes that they have done, right? And in doing so, you can avoid the same outcome. So what are those mistakes? I think the biggest mistake is over leveraging, which means becoming greedy and thinking that Forex is a place where you can make plenty of money. Which is far from true, especially for the newbies, you know. So the mindset itself is very wrong from the beginning. You should not come to Forex thinking that you can become a millionaire overnight. So what should you do? What should be your mindset? What should be your thinking? I think the thinking you should have is Forex is a great opportunity which can bring you consistent money. It's a perennial source of income, guys, because Forex will exist as long as nations exist, right? Different currencies will exist for different countries. So which is actually good news. And so we should now think, okay, it's a great source of income. It is there for me forever. Now what should I be doing to make it work for me? The second reason why people have failed is undercapitalized. People fund their accounts with $100, $200, hoping to become a millionaire. Do you really think it will work out that way, especially when you're a newbie and you have no track record of success? See, there is difference between confidence and hope, right? When you fund your account with $200, what exactly is your situation there? Are you confident, or you're just hoping you can turn this $200 to something bigger amount? You know what, I don't really need a presentation to show you all this, right? I can do this impromptu, but I've put this in place not to forget anything. So let's continue. Now, the second biggest reason, as I said, is being undercapitalized, and third is lack of knowledge. Right, people know technical analysis, they have seen, or they have browsed through some charts and they feel, okay, I've got a good grasp of the subject. Which could be true to some extent. I would say the technical analysis is the easiest part. So broadly speaking, let's focus on these three areas, right? Being properly capitalized, not becoming greedy, and then having some technical analysis knowledge. So what do you think, guys? Have you ever thought about these three? Yeah. Okay, as you can see here, the prices are trying to turn down from here. We had identified this resistance level on the 5-minute chart. Now hopefully the prices should turn down from here. So looking good so far. I will remove the fibs and let's go back to the 15-minute chart. So how can you put these three things into a strategy for success, right? Strategy for success. So first of all, you should save enough money and have an account which is sizable. When I say sizable, it should not be $100 or $200, but rather it should be at least $2,000 to $3,000. Now even 2,000 to 3,000 is on the lesser side, but for people who start with an account of $100, I would say don't go with $100, but rather aim for $2,000 to $3,000. If you ask me, if I were you, then I would be starting an account with at least $5,000 to $10,000. Because it makes things easier when it comes to, you know, trading with the right mindset. First, you will be more responsible because you have your money on the line, right? You may be very careless. You may have that speculative mindset or betting mindset when it is just $100 or $200. You'll say, okay, let's give it a try. If I lose, it's just $100 or $200, but I have a lot to gain. If I get lucky, you know, maybe I'll earn $500, $1,000. So let's go for it. You know, that will be the kind of mindset you will have if you fund with $100 account. But when you fund with your hard-earned money, like $5,000 or $10,000, first of all, you are serious about making money out of Forex, and you will be very careful with the money because it's your hard-earned money. It's a big savings that you are putting it on the line. The moment you think that yes, you agree and you say yes, it makes sense, I should be funding my account with $5,000 or $10,000, your mindset has become serious now. So you have started thinking like a professional. Now you should also act like a professional. Funding of the account with $5,000 or $10,000 is just the beginning. It's the easiest part. The most difficult part or the challenging part is to protect your capital and make it grow. Right? So what do? How can you protect your account? By taking smaller sizes. Don't go for bigger sizes. If your account was $100, your betting mindset will go for bigger size trades, right? But when you have a bigger account and you want to protect your account because it's your hard-earned money, obviously you have to go for trade sizes which are more manageable. The losses are so small because the trade size is small, the losses become manageable. So all right, guys, Adina, come here. I will come back in about 40 minutes. Okay, I'm going to end the stream here because I need to have my food and then I'll come back.